than just business news, we're news for business people.
Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Indian markets hold gains for the third day in a row. Drug makers and auto stocks lead the rally. Commercial vehicle makers made merry in November, sales rising more than 50% last month. Two-wheeler sales also register healthy growth of more than 20%. Government moves Supreme Court seeking to halt the Vodafone tax arbitration. Banks may send loans worth close to 1.8 lakh crore to the NCLT after making little progress on resolving the stress in the 29 accounts mentioned in the RBI's second list. All right, it's been a decent start to the week. Neeraj is taking a closer look at some of those stocks that have been moving today. Neeraj?
Yeah, you could argue that we are off the highs of the day, but hey,
Yeah.
it's still not a bad start, considering that Thursday and Friday were such good days and some extension of long positions as well in the session today. But the global markets too are not doing too badly. In fact, when the last time that I spotted, be it the European markets and how they were trading or how the Dow futures were doing, I think the global market picture is a decent picture. Asia didn't do too badly as well. So all in all, the mood in the global markets is not too bad. Look at the last 3 days or the 5-day or the 7-day chart of our markets as well, and you will see the kind of gains that we've had after a bit of a pullback until mid next week. I think Thursday, Friday and Monday we've had a good pullback, and that seems to be continuing. Today, amongst noticeable movers, I thought ITC, no apparent reason, but if you look at what the stock's done Thursday, Friday, maybe the market mood aiding it, and in today's session there's another 1.5% for ITC. So went down to support levels, bouncing back today. HPCL, and maybe even BP IOC, but HPCL in particular, maybe it's come off a little bit, but HPCL should come up on the screen as well. Another 1.5% after a strong 3% move that these stocks had. So it's good going really. And then the broader end of the spectrum, some news-based, some otherwise, but paper has been on a roll. Remember, Bloomberg Quint spoke to Ruchira paper earlier on as well. The earnings trajectory seems to be strong for these counters, but Seshasai, Ruchira, Star Paper Mills, it's a big move really for some of these paper companies as well. So that is one. I thought results impact on UCal Fuel Systems as well as Aegis Logistics were fairly strong, so needed to highlight them. And Max India, well, caught an eye of a storm, and the stock really reacting as well. So that one is down about 4%.
Quick word on paper. Is there a cyclical turnaround for the sector as a whole?
Yeah, so that's what the management seem to be suggesting, that and they're saying that in this turn, operational and otherwise, things look very strong. Looking good for now, but difficult to say for how long will it last.
It's not just these guys, the entire paper
the entire paper space. In fact, the website has this story that will come up or would have already been up. So in the next 1 hour, you will hear out the whole interaction with Ruchira paper and a small story around the paper companies as well.
Interesting, Neeraj. Thank you so much for that. But the big story today, government has moved Supreme Court in a bid to halt the Vodafone tax arbitration. An international arbitration tribunal is slotted to start hearing the 22,000 crore tax case from February. The government is seeking a stay. to counter the bilateral pact with the United Kingdom, where Vodafone is headquartered out of. Arpan Chaturvedi now joins us on the phone line with more details on the story. Arpan, what's really going on, and what's the government basing its arguments on?
Well, basically what has happened today was that the government has challenged a Delhi High Court order which is related to the appointment of the three arbitrators. So basically what happens is that one arbitrator each is from the parties, and the presiding chairman is decided by the parties in consultation. And that was the point of dispute on which Delhi High Court had ruled that it prefers that the parties should are free to come to an agreement, and as far as the appointment of the arbitrators is concerned. So this whole matter relates to the appointment of arbitrators specifically, and this, as we know, this whole arbitration case is about the Vodafone retrospective taxation case in which the Supreme Court had overturned a Bombay High Court order and had said that Vodafone was not liable to pay any taxes as far as their transactions with Hutchison SR was concerned. And after that, of course, we remember that the finance bill came, which had a clause with retrospective effect, which basically, according to the government, made Vodafone once again liable to pay the taxes. After that, of course, the first arbitration case, which is already pending, and this is the second arbitration case in which the appointment of arbitrators is a point of dispute right now, and has reached the door to the Supreme Court.
All right, Arpan, hold the thought. You've been tracking another story that's been filed in the Supreme Court today. This is the Unitech moving Supreme Court against the MCA's decision to take over the management of the company. We told you this exclusive story about how the Ministry of Corporate Affairs is going to be taking over the management control of Unitech and disband the board. It looks like Unitech has now challenged this move by the Ministry of Corporate Affairs. Arpan, what do we know on this?
Right. So this case, basically, again, what has happened in the Supreme Court relates to what happened on the last Friday at the National Company Law Tribunal in New Delhi, the NCLT. Now, there the government had moved the plea, and that post that the NCLT had passed certain orders, specifically three main orders. First, that the Unitech board was suspended, and the government was asked to appoint their own nominees. Now, remember, after this what happened post-lunch on Friday, that Unitech's counsel approached the court, the NCLT, and said that they should put their order in abeyance because of a Supreme Court order which said that no coercive action will be taken against Unitech, which the Supreme Court had passed while hearing bail plea of Sanjay Chandra. But the NCLT again did not did not agree to put the order in abeyance, and they said that their order would be subject to the Supreme Court directions. And now today, Unitech had approached the Supreme Court challenging those orders of the NCLT, basically, which superseded the directors of Unitech.
Interesting. That let's wait and watch how that story unfolds. Arpan, thank you so much for joining us with your views on what's going on in the Supreme Court. Come Wednesday, bankers will have to submit a resolution plan for 29 companies identified in the Reserve Bank of India's second list of stressed accounts. Chances are most of them will have to be admitted for insolvency. Three bankers Bloomberg Quint spoke to say that the list includes the three large accounts that make up for 40% of the total 1.8 lakh crore that's on the line. Vishwanath Nair, who's been speaking to all the bankers involved in this, joins us with some more details. How big is the total exposure to these accounts, Vishwanath?
Exposures worth 1.82 lakh crore at a risk of going into the insolvency and bankruptcy process as early as the end of this month. That is what our banking sources are telling us. Now, if you remember, in August, the Reserve Bank of India had sent a list of about 29 corporate accounts to bankers for resolution outside the insolvency and bankruptcy process by the 13th of December. If the bankers had failed in securing any kind of resolution process for these accounts, they would go into the NCLT for an insolvency proceeding. Now, what bankers are telling us is that out of 29 accounts, the banking sector has an exposure of about 1.82 lakh crore, and nearly 40%, that's about 70,000 crore worth of exposure is concentrated in only three accounts. That's IVRCL Limited, Videocon Industries, and Jaiprakash Associates. What bankers are also telling us is that they had identified about 11 out of these 29 accounts which could be resolved outside the NCLT process. However, of these 11, only 4 or 5 are anywhere close to a real resolution plan. Now, bankers have been holding a very high provisioning in all of these accounts for a very long time because they have been NPAs for a while, so they have been providing for these accounts over the last few financial years. So therefore, if these accounts do end up going into the insolvency and bankruptcy process, the provisioning hit that was expected on the bankers' books, that will not be as high as what some people would have worried.
Okay, let me just push that point that you're making. Of the three large accounts that you mentioned, are any of these three on the list of 11 which may be resolved outside the ambit of the NCLT?
Of the three accounts that we mentioned about IVRCL, Videocon Industries and Jaiprakash Associates, only JP Associates is the single company where bankers are trying to somehow resolve the case outside the insolvency and bankruptcy process. They are working with the promoters. That is what bankers are telling us, that they are working with the promoters to find some kind of a resolution plan, some deep restructuring that can help the company turn around. The domestic bankers' exposure in this case is over 29,000 crore. That is what the banking sources are telling us. In case of Videocon Industries and IVRCL, bankers are more or less certain that these accounts are going into the insolvency and bankruptcy process. Videocon Industries also has a subsidiary, Videocon Telecommunications, which is part of these 29 accounts that the Reserve Bank had pointed out. In case of Videocon, however, lenders are open to some form of one-time settlement with the promoters, and if the promoters are able to bring in some money before the 13th of December, then this can be settled. However, it is likely, bankers are telling us, that both these accounts will end up in the NCLT process.
Vishwanath, thank you so much indeed for joining us. That's the story on what's going on at the second list of what the RBI list and the next step forward in that story. Automakers, meanwhile, had a blast in November. They clocked double-digit sales growth across the board. Commercial vehicles led the charge with over 50% growth. Krishanu joins us from Delhi with what the SIAM data is actually showing right now. Now, Krishanu, how much of this can be attributed to base effect? Was it, after effect of demon last year?
Well, according to what SIAM says, almost all of it can be attributed to demonetization. To answer that question of yours, now to take it category-wise, passenger vehicles, passenger cars specifically saw a modest growth of 4.5%. Two-wheelers, on the other hand, they saw sales surge by 23.5%, but for commercial vehicles, as you pointed out, the growth was over 50%. Now, as you would remember, last year during November 2016. Two-wheelers and commercial vehicles particularly were the segments that took a hit because of a more of a cash economy running in the rural belts of the country and among fleet operators who buy commercial vehicles, the MNHCVs and the LCVs also. So these were the two segments that took a major hit last year. And whereas passenger cars were a little shielded, considering most of these purchases within the car segment happens via loans. So these are the three segments, and largely the reason for that SIAM has attributed for the sudden rise in sales is demonetization. Apart from that, they've said that good monsoons have actually improved the rural sales from the rural belts of India, parts of India, because now, as you know, these sales come typically with a lag of 3 months after the farmers get their money and after they sell their produce. So this is also a reason why two-wheeler sales have picked up, and also of commercial vehicles is what SIAM has said. Now, going ahead, we could expect the same performance even into December, because last year, in December 2016 also, we saw a fall in sales due to the continued effect of demonetization. And so we could expect the same thing happening, the same surge happening in December this year as well.
All right, we'll leave it there. Thank you, Krishanu, for joining us with those details. But perhaps that optimism is rubbing off on some of the brokerages. Morgan Stanley, for instance, is betting big on Maruti. The brokerage has raised its targets on the country's largest car maker to 10,563, which is the highest on the street. The stock is currently trading at about 9,100 levels. Yatin is standing by to tell us the rationale behind this bullish call. Yatin.
Harsha, thanks for that. If you look at Morgan Stanley, probably it has one of the highest target price as far as Maruti goes. Target price in excess of 10,500 rupees per share, and they've increased it significantly from the earlier level, which was close to 9,000 rupees a piece. Now, in the bull case, Morgan Stanley is expecting a target price of almost 14,400 on Maruti Suzuki. Given the fact that we have strong growth coming in and strong premiumization coming in for Maruti Suzuki in its core products, probably because of which we could see almost a 22% CAGR in terms of earnings for the next 2 to 3 financial years, which is basically up to 2020. And Morgan Stanley does believe that the kind of cash flows and the kind of margin expansion that we are looking at for Maruti justifies the premium valuation. In fact, it's one of the premium, profitable company among the globally listed, OEMs. So on that basis, we have seen Morgan Stanley turn bullish on Maruti Suzuki, which is probably trading at record highs, over that levels of 9,000. So clearly the brokerages have been quite bullish, and from here on, if you look at the bull case scenario, offers almost 59% upside from Friday's close, which is quite big as far as the frontline auto companies are concerned.
Terrific that over 10,000, that's the price target that Morgan Stanley is putting on Maruti Suzuki, that's trading at about 9,100 levels. Yatin, thank you for that. Let's move on. It's the age of artificial intelligence and machine learning, and Indian IT companies are shifting to a more nimble business structure to adapt to these changes. Earlier in the day, we spoke to Rastov Ravanan, Managing Director and CEO at Mindtree, to understand how Mindtree is preparing for this transformation. He believes that clients now prefer expertise in these niche segments over scale. Here's a snippet.
In the wave of new technologies that is sort of colloquially branded as digital, the one big change that we are seeing is customers value expertise more than scale, and that plays very well into the sweet spot for specialized players like ourselves. Secondly, even on the more commoditized run the business kind of work, the investments we have made on differentiated platforms is generating a lot of traction. For example, a few days back, Gartner ranked us as amongst the top 3 players in the world on DevOps. So all the investments we have made behind platforms, behind building expertise is resonating very well in the marketplace. And I think lastly, a little bit of the challenges we faced in the last year, 2016-17, where several of our large customers degrew for different reasons, not linked to Mindtree or our delivery, but their own business pressures were impacting them. Those pressures are easing off right now. Those customers are hit the natural sort of thresholds where there, and other customers are growing. So we're beginning to see a much stronger growth momentum for us. Some benefit in Q2. I think we'll continue the trend in Q3 as well as in the next 2 or 3 quarters. And then you marry that with the improvement in profitability, because the biggest impact to profitability is revenue growth. So combined with both the revenue improvement as well as our cost saving initiatives have also led to profitability improvement as well. So that's the picture we see for Mindtree. The only comment I would like to make at a broader industry level is that customers today value expertise more than scale. So those companies, irrespective of large or small, which have caught that trend, invested and built the relevant sort of capabilities, are beginning to see, like I said, a good response from customers in today's market.
I think 2 very important messages that come out from you. One is that the customer is valuing expertise more than scale, because traditionally I don't think that was the case. 2, is this in a manner of speaking built to last? Because I like the term that you use, all expertise colloquially branded as digital, but within that as well, are companies like you building, in a manner of speaking, verticals in the digital space, and are those built to last, or built to last for the next 4 or 5 or 6 years without them getting disrupted as well?
I hate to call any trends in the marketplace, because God knows what startup or what large company is coming up with a new invention last night, and so therefore difficult to make like an assertion at this moment. However, the fundamental point is, I think all of us good companies in our industry have built in a lot of agility into our businesses. So we have become a lot more nimble, whether it is reading the market, understanding customer perception, learning technology as it evolves very, very dynamically, etc. So I think we have built in a lot more resilience already in the business over the past 3 or 4 decades, and now we have coupled that resilience with a lot of agility. So I think the good companies in an industry will do well in spite of a highly dynamic, fast evolving marketplace over the next 4 or 5 years. But I think this trend of moving towards more expertise-based positioning, I think that will last for a long time because you've seen that same maturity curve from other industries as well. So I think that trend will, will prevail itself in our industry also over the next 3 or 4 years. And it is not as though all large companies are bad and not also all small companies are good. I think there are good companies in both ends of the spectrum.
All right, that's Rostov Ramanan of Mindtree talking about what's going on in the industry, the digital transformation and its challenges. Let's shift focus now and talk about freight. The world's largest container shipping line is not painting a very rosy picture. Maersk says freight rates have started falling after climbing for better part of the year. This means that global trade recovery may be faltering. Dhwani Pandya of Bloomberg News joins us with more details. Dhwani, thanks for joining us first. What is Maersk saying? And is this freight rates going soft? Is this a near-term trend, or does this indicate a larger, weakness in global trade?
Okay, so what Maersk is basically saying that there are signs of global trade recovering, but at the same time the supply of containers, the ship volumes is still very high. So they are saying that in the third quarter they have started seeing a downward pressure on freights, and if shipping companies, don't be very realistic about adding more ships, then it can create problems. Even Fitch Rating is saying that the ship containers could grow at 5.5% in 2018, which is quite higher than the expected demand, which is 4.5%.
So is this a near-term oversupply situation, or does it indicate a larger weakness in the medium term?
It's a near-term weakness because all will depend on demand situation also. Since global trade is improving, there is a hope that demand will also improve. But as Steve Felder, the Maersk CEO, says that currently the global trade order book is around 13.5% of capacity, which is not very high.
Which is not very high. Okay, one final question. So if you were to compare this, let's say, to air freight, is there any indication that that things are okay, that the global demand is relatively all right?
Air freights are in fact doing quite better than sea freights, and main reason experts are giving is that e-commerce is doing very well, and that could really help air freights to remain buoyant in next near term.
Sure. Dhwani, thank you so much indeed for joining us. That's the interesting story on containers, freight rates, and what that means. Let's move on now, talk about Indian companies. Now, Indian companies sold $1.8 billion worth of dollar bonds in November. That's been the busiest month in 2017 so far. Issuers may have brought forward next year's sale plans so that they can cash in on the sovereign upgrade. Remember, Moody's raised India's rating for the first time in 14 years in mid-November. This pushed yield premiums on the nation's dollar debt to the lowest in at least a decade. That's spurred the demand for dollar bonds in the month of November. Meanwhile, the rupee is poised for its first annual appreciation since 2009. Nomura expects the rally to continue into 2018. In a conversation with ERA, Craig Chan, the global head of emerging market forex strategy at Nomura, says that he expects the rupee to be one of the top performers next year. His rupee target at 63.50 to the dollar for the end of next year. Listen to that slice of that conversation.
On a total return basis, it is near the top performers in the Asia currency pack.
Okay. What is your view on the Indian currency right now? What are the factors at play there?
So I think there's a lot. I think firstly there is the global backdrop where we at Nomura believe we're still in a relatively growth positive inducive environment. The sweet spot of strong global growth, relatively low inflation, DM policy normalization, which is likely to be gradual. That's going to be very supportive of the India rupee into next year. But domestically, I think there's other factors as well. There's been a lot of hurdles that we've gone over the past few months. Concerns about growth not picking up. We have seen evidence that growth is accelerating again in the third quarter. There's been concerns about the current account deficit and the financing of that, and it looks like it's clearly still very heavily financed by FDI RBI and, of course, portfolio flows. And I would say on the fiscal front, there was fiscal slippage concerns, but even that has somewhat ebbed. The fact that there is going to be some recapitalization of the banks, that's actually being viewed as positive. And I think the key thing is we've heard from the finance ministry that over the medium term, there's still this fiscal consolidation push. So I do think that there's still a lot of positivity around India and, of course, the rupee at this point in time.
Okay. Craig, one sort of slightly longer term question. I mean, at least on the real effective exchange rate indices, the Indian currency is looking overvalued. We've been saying that for a while. It doesn't necessarily mean anything on a day-to-day basis until, things change globally. Do you think the fact that we're sort of overvalued on a real basis could make the Indian rupee susceptible to sort of sharp corrections should the global environment turn negative at any point?
Yeah, so I would say one thing, and that is we have numerous models to try and measure FX valuations. And the one that we actually favor the most is the one that I would say even the RBI Governor, Urjit Patel, has mentioned before, looking at the real effective exchange rate and adjusting for productivity. And when we do that kind of calculations, what I tell you is that our valuation model, adjusting for productivity of the real effective exchange rate, shows that the currency actually, even at this point in time, is still 7% undervalued. So in our measurements of that, we don't actually think it's a big issue. What I tell you is very important as well, is that even with the valuations we have, and even if you don't believe in that model and you focus on just pure real effective exchange rate, I think we're in a situation where there's significant focus of the US Treasury on RBI's intervention. And if we're looking at, for example, year to September intervention, the amount of intervention versus nominal GDP is actually about 2.7%. And that is over that threshold of intervention, excuse me, that the US Treasury has mentioned, this 2% level. So I'd say that this is already a big issue that's probably constraining RBI from actually intervening in the markets.
All right. Craig, that gives me a segue into your view on the Chinese currency as well. Domestically, there's a lot of interest on how the Chinese currency moves vis-a-vis the dollar and how the Indian rupee moves just because of the trade linkages. What's your view on the Chinese yuan going from here into 2018?
Well, I've actually always been very cautious on renminbi. I would say that some things which are very important. You look at the overall flow dynamics in China. I think yesterday was a great example when we had the November FX reserves. The FX reserves, once you adjust for valuation effects and coupon payments, you can see that they struggle to increase. That's been the case for almost the whole of this year. We've seen some months of increase, but we've seen largely monthly falls in reserves. Now, even in a backdrop where growth is surprising people on the upside this year, a backdrop where foreign investors have been actually investing into Chinese equities and bond markets, and of course the whole mentality of the foreigners changing on renminbi, I'm actually extremely disappointed. I'm disappointed that reserves actually haven't increased a lot. And I think that the rationale for that is the local diversification. There's still a huge diversification push into foreign assets from locals. And what it tells me is that if we go into next year and there's a deleveraging push, there's growth challenges, there's a kind of risk premium rising, defaults coming through, I think the diversification from locals can accelerate. I think the investment from foreigners will become much more cautious, which only tells you one thing. Reserves probably will fall a lot more next year than they have this year, which means that renminbi, in my view, over the medium term, will continue to depreciate.
So then the Indian currency would appreciate perhaps the next year, going by your forecast, and the renminbi would probably depreciate. Can you give me targets? I didn't ask you for a target on the rupee as well. Do you have targets on the rupee for 2018? And if you can share the renminbi target as well?
Absolutely. So we're looking for relatively strong performance in the India rupee. We're looking at dollar INR at 63 by the middle of next year, so it gives you pretty good total returns, just around 4.5%. By the end of 2018, we're looking at 63.50. But on a total return basis, it's still very attractive. On renminbi, we're actually looking for something not that significant, more or less in line with the forward market, around 680 by the end of next year. But I would just say that the risks, in my view, are actually to the top side.
That's a view from Nomura on the currency. But coming up next, we're going to be talking about India's startup ecosystem and venture capital with serial entrepreneur K. Ganesh, who's coming up on the other side.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Back on lunch, the headlines at this hour. Nifty fails to defend 10,300. Energy stocks drag the benchmark down. Wild first day for Bitcoin futures as it starts trading on the CBOE. Kuwait's oil minister says OPEC members and other oil producers may end production cuts before 2019. We're checking how the markets are faring. It was a good steady start to the week in trade, but you're seeing some weakness creep by in some of those sectors at the moment, but not so much indeed. Pradeep is taking a closer look at some of those movers and shakers. Pradeep.
Yeah, so if you look at it, from Thursday's low of around 10,030 to today's high, we have seen almost a 300 points movement in Nifty, and thereafter if there is some amount of profit booking, that's not surprising. But what is surprising, there are 2 or 3 factors I would like to highlight. One is RIL. In fact, Reliance Industries came under pressure on Friday itself. It went below Thursday's levels actually. That was quite surprising, and today also after initial buying it has once again come under pressure. So RIL underperforming in a rising market is a bit of a rare phenomenon, that too on second day in a row. Second thing is the India VIX, which is moving up. Now that is interesting because normally we see that when market falls, the VIX moves up. Today, while market is actually rising, VIX is moving up. One explanation that traders are giving is that probably people are positioning for events, and therefore there is more of option buying than buying into futures or taking a position in the cash market. So that could be one reason why VIX is moving up. So this could be related to event rather than the direction that market is likely to take. The third interesting point here is that what happened today, we went for a gap up. But after that, you look at what's happening to Nifty, and more specifically to Nifty Bank. Initially we saw HDFC, SBI, and the other banking heavyweights really supporting the markets, but they have all come under pressure, gradually as the day progresses, and that is something interesting, really, to see. Well, it's difficult to really explain what is really driving these kind of movements, but there are definitely some paradoxes, and we'll have to wait and see how market really fares. But there are quite a lot of stocks that have been doing well. If you look at in today's market, ITC has come forward to support the index, and there are some of the heavyweights from other sectors that have been supporting it. You also have lots of mid-cap names. So Jet got a favorable report from a brokerage. It's moving up. You see Arvind has done quite well with excellent volumes. You have some of the second-line stocks like Wockhardt, Tata Communication, and one story of the day is really paper, where we see all the paper stocks moving up. Some of them like Star Paper have hit the 20% circuit as well on hope hopes that probably what has happened in chemical may repeat in paper because China wants to control pollution. So net in mid-cap space, still there are more buyers than sellers, and the market undertone remains quite strong, although Nifty Bank had slipped into red a couple of minutes back and is kind of struggling.
Interesting that, Pradeep. Thank you so much, Harit, for joining us with those details. That's the market action for you. Let's move on now. Wall Street economists are telling investors to brace for the biggest tightening of monetary policy in more than a decade. Citigroup and JP Morgan Chase predict average interest rates across advanced economies to climb at least 1% next year. As for quantitative easing, Bloomberg Economics predicts that net asset purchases by the main central banks will fall to from monthly $18 billion at the end of 2018 from $126 billion in September 2017. In a conversation with Bloomberg's Jonathan Ferro, Keith Parker of UBS, Lizanne Saunders of Charles Schwab also say that federal funds rate is headed on its way up. Listen to that conversation.
Anyone that has an income orientation actually views this a bit in the opposite way. And if you think about the deleveraging that's happened across the household sector in the last several years, it's about a 5-to-1 ratio now of assets on household balance sheets that benefit from higher rates versus liabilities on household balance sheets that are hurt. And I think that's something that's kind of missing in the argument. In addition, financial conditions have actually gotten looser in the last 2 years since the Fed began raising interest rates. I think it's one of the things that gives them the freedom to continue to hike interest rates. But that's sometimes lost in the discussion, too, is that we have easier financial conditions now than we did 2 years ago when the Fed embarked on this.
Keith, it's a down case for you, downside case, Fed dependent?
Our downside case is the Fed continuing to hike as we get that growth recession or growth stagnation. And I think we quantify that as down a little bit more than 15%. I think the Fed has proven that they would respond to growth signals. And so we see the upside case likelihood much greater than the downside.
All right, let's move on. OPEC members and other oil-producing nations like Russia may not extend production cuts beyond 2018. So says oil minister of Kuwait. He told Bloomberg News that Russia is in fact keen to end the output capping deal as soon as possible, which means chances are that the production cuts will be called off before 2019. All depends on the market rebalancing by June next year, he says. That's oil for you, but let's talk about Bitcoin. It started on Wall Street with a bang. Futures on the world's most popular cryptocurrency surged as much as 25% during its debut session on the CBOE Global Markets Exchange. This triggered 2 temporary trading halts meant to cool volatility. Dealers say initial volumes exceeded expectations, while traffic on CBOE's website was so strong that it caused delays and outages. Bloomberg's Yuji Nakamura reports on the Bitcoin's debut on the CBOE futures trading.
What we saw with the first hour of trading is about $9 million in notional traded on the CBOE across all the contracts. And then just to put that into perspective, over the same period of time, about roughly $300 million traded globally on Bitcoin exchanges, Bitcoin spot against the dollar. So for now, the futures are really just a drop in the ocean. Having said that, I think, we are seeing consistent buying or selling, activity every single minute, just 1 or 2 lots. The minimum sizes. I think what that shows us is there is demand for this product. But usually on the first day of a futures contract, you see very little activity because brokers will just kind of test their systems, make sure that the trading is working, make sure that settlement is working. But today, right out of the gate, we're seeing 1, 2 contracts being bought consistently every single hour. So the notional so far isn't huge, but it's not a bad start. As for your question on who's doing this, the CBOE contract is geared more towards retail people. It is smaller. It's about $16,000 in notional right now versus the CME, which goes live in a week. That's more for institutional traders. That's about 5 times bigger than the CBOE contract. So I think the CBOE is more geared towards retail, and that's probably who we're seeing trade. For example, Interactive Brokers have said publicly that they will support it from day one. This is just a guess, but I'm guessing retail traders are the ones just buying and selling here a little bit early on so far.
More on that, Coinbase CEO Brian Armstrong believes that listing of Bitcoin futures is a validation of digital currencies as a real asset class. In a conversation with Bloomberg, he says that people would prefer to work with a company that specializes in the sector rather than a broader exchange. Listen in.
It's just a big endorsement of the digital currency space, as this is a real asset class that more and more players are going to trade. But I think for us specifically, what it means is that we offer spot market data to a number of these providers, or we're discussing it with them. We run the largest institutional exchange in the United States called GDAX for digital currency. The other thing is that we are offering a custodian product where a lot of institutional investors need a secure way to store digital currency on behalf of their LPs and their clients. And so we launched a product recently on that for Coinbase custody. So those are the ways that it might influence our business.
Are you at all worried, though, that your clients might decide to go work with traditional mainstream Wall Street companies rather than Coinbase?
Well, I mean, I think it's certainly an option. Like, there's going to be more and more people involved in the digital currency space. Like, we're not going to be the only ones. And so I think that's a good thing. Like, there's just going to be a diversity of players out there. There's going to be a lot of winners. But digital currency is moving so fast that I do think a company dedicated to it with 200 people who've built up this industry knowledge over the last 5 years is going to have a sustainable competitive advantage.
How do you see Bitcoin versus Ethereum playing out? I mean, do you see the Bitcoin spike continuing? Do you see Ethereum surpassing Bitcoin, as some have suggested it will?
Yeah. Well, of course, I never want to be giving any investment advice, but I mean, just in broad strokes, the way I think of it is that Bitcoin does have a certain amount of guaranteed scarcity built in. There's only ever going to be 21 million coins. And of course, if something's more scarce, the price can be driven up. Ethereum has taken a different approach, which is that there may be a moderate inflation curve, almost like the US dollar. They might target 2 to 3% inflation a year. They're actually still deciding exactly what it's going to be. So it's not, Ethereum's not trying to be gold, which is what Bitcoin is. It's trying to be something more like a payment network or something more programmable. So that all factors into what the price will be. I guess one other really broad thing you could look at is just where are the users going, and where are the developers building the new apps? I personally see more developers building apps on top of Ethereum today. So that's one other factor which could point to what it might be in the future.
That's all the action on Bitcoin. All right, we're in the middle of a global startup boom, and India is on the forefront of it all. On Power Lunch today, we have a special guest, serial entrepreneur, whose venture capital firm has funded the growth of many stalwarts in the Indian startup ecosystem. Let's welcome in K. Ganesh, partner Growth Story. Growth Story's portfolio includes Big Basket, Poornima Medical, Fresh Menu, to name just a few. And the company is now venturing into new age technology firms like Burloop, an artificial intelligence company, it seems. Let's hear more about the budding businesses and ideas from Ganesh himself. Ganesh, thank you so much indeed for joining us on Bloomberg Quint. Appreciate your time for us. Let me begin this conversation by asking you about what's the sense, what's the startup environment, how is it looking? Are there enough ideas out there in the market? Is there enough capital chasing those ideas?
Yeah, thanks. Happy to be here. I think India is at a sort of inflection point, to use a cliche. We saw that 2 years back there was huge run up in terms of valuations and hedge funds, global hedge funds coming into India. Then we have seen a bit of slowdown. But the correction is now over, and in terms of the funds flow, it's again starting to look up. But what we are most excited about in the startup ecosystem is there are some of the events that have taken place in the last 12 months have given it a huge boost. One, for instance, the demonetization has ensured that we have gone into the payment.
All right, we seem to have lost that connection with Ganesh, but this is the interesting story that Growth Story has been involved in. They've been invested in some of those interesting startup stories, and Growth Story works on a different model of taking equity position in most of these companies. Big Basket, for instance, has been a big one that's changed the game in the online grocery space. He's also been invested in Poornima Medical, that also tries to. It's also been a sort of a pioneer in the home care space and the healthcare space as well. But that's Growth Story for you. Well, let's wait and repatch the line with Ganesh in just a moment and tell you how the startup ecosystem is really evaluating. All right, before we get to Ganesh, while we try and get that line back for you, let's try and tell you another one. It's been nearly a year since Vodafone and Idea decided to join hands in India to create what's become the largest telecom operator. Once the merger is complete, the two telecom operators have lost some ground over the last 11 months, with fierce competition from peers like Reliance Jio and Airtel taking a toll on margins consumer base. What's the situation now, and will the joint entity still be the largest telecom operator as was envisaged? Sumit is here, who's done some math. Sumit, so tell us what's the situation now and how does it affect the incumbent players?
So I'll start off with showing how the merged entity looked like and what is the current situation. So when the merger was announced, the combined entity's revenue was close to 81,600 crore rupees, EBITDA was 24,400 crore rupees. The combined entity had a revenue market share of 44% and a subscriber base of 35.1%. As of now, the combined entity's revenue is close to 72,000 crore rupees. EBITDA is down to 17,000 crore rupees. Revenue market share down to 38% and subscriber base as low as 33.6%. So it has seen a fall of 10,000 crore rupees at the top line. The EBITDA is down by around 7,500 crore rupees, revenue market share down by 600 basis points, while customer base is down by 150 basis points. Now, this fall in revenue and EBITDA could worsen in the coming quarters because of the 57% cut in the interconnect usage charges. Now, let's see how things have changed on the operational synergy side. Now, the merged entity was eyeing a benefit of close to 14,000 crore rupees annually from the fourth full year of completion. Of this 14,000 crore rupees, 60%, that is 8,400 crore rupees, would be an operational benefit, while the remaining would be on the capex side. Now, this merged entity could still see this operational benefit of 8,400 crore rupees, but as the base is low, base EBITDA is now low, the net benefit for the merged entity would be only close to 900 crore rupees. So, in short, this merger would help these two entities to return to an EBITDA run rate as of the date of announcement. And because if you can clearly see here, 90% of the benefit that they were supposed to arrive has now been gone because of that has now been eroded now from the EBITDA. Now, if you see the debt position of the company, the 31% fall in EBITDA that they have seen has also taken their net debt to EBITDA to 6.5 times as compared to their forecasted net debt to EBITDA of 4.4 times. Now, in this merged entity, Vodafone was supposed to put in a debt of around 55,200 crore rupees, while Idea has a debt of close to 54,000 crore rupees as of now. Lastly, let's see whether the merged entity will still be the number one operator. Now, currently the combined entity's revenue market share is exceeding the 50% regulatory cap in three circles, that is Maharashtra, Gujarat and Kerala. Now, the merged entity will need to bring down its revenue market share in these three circles below 50% within 1 year of completion of this merger. Also, Bharti Airtel, which recently acquired Telenor and Tata Teleservices, has an all-India revenue market share of close to 35.9%. So, even if we assume that Jio does not gain any more market share, then too the merged entity will have to bring down its revenue market share in those two circles, and the difference now being of just 190 basis points between Vodafone Idea and Airtel. There are high chances that the combined entity would not remain the number one player in the telecom industry.
The dynamics of the telecom game are changing and changing quickly. Sumit, thank you so much indeed for joining us with those details. Let's get back to the conversation with K. Ganesh, partner of Growth Story. Ganesh, sorry we lost you on that line. Let me let you complete that answer that you were talking about, how demonetization has really mushroomed a bunch of startups. Go on.
Yeah, so what demonetization has done has made digital payments at the hands of tier 2, tier 3 cities, small kirana stores. So the acceptance of online transaction and digital payment has got a fillip courtesy demonetization. Parallelly, private operators like Reliance Jio, for example, launching low-cost internet, mobile internet, has taken internet to the masses. So all this has happened in the last 12-13 months. This has given a huge fillip to have businesses which are using mobile internet, smartphones, feature phones to solve day-to-day problems, whether it is fintech, financial inclusion, agri-tech. So all of that has happened in the last 12 to 14 months. So this, I think, has changed the nature of the startup. It's no longer about the elite, the first 30 million people accessing on the smartphone apps, a hyperlocal delivery or a Flipkart or a Big Basket or Amazon purchase, but it's getting used for grassroots applications in tier 2, tier 3 cities in vernacular languages. So the opportunities are multifold courtesy some of these events that have taken place.
What are you excited by, Ganesh? I understand that you're betting big on an artificial intelligence firm, also on food tech. Tell us more about some of these ideas that you're working on.
See, our philosophy has been how do we use the latest tools and technologies to be able to solve common problems. So simply put, roti, kapda, makan, entertainment, healthcare and education, those are the core needs. Now, we are working on, can I use the latest tools, be it the smartphone, internet, artificial intelligence, chatbots, machine learning, to do the same jobs quicker, easier, simpler. So in Big Basket, for example, instead of offline retail, we bring the entire groceries home. In Poornima Medical, we do this doctors, nurses, nursing attendant, we bring healthcare to home. In Fresh Menu, which is a cloud-only restaurant or an internet restaurant, we supply fine dining food without incurring the costs of high street real estate rental costs or the hassles of the consumer to travel. We bring it home. All of this is getting powered at the back end by a lot of analytics, enterprise level platform, and using data sciences, including AI and machine learning, to be able to predict the demand and give on-time delivery of these products and services. So you almost see it as an enterprise platform using these technologies as the backbone, as compared to in traditional businesses, real estate would have been the business.
Got it. A question about Poornima. You know, I understand that you raised about $26 million recently in Series C funding. What's the story there? And, you know, what is the opportunity as you see it? Okay, I'm afraid we seem to have lost Ganesh once again. Let's try and repatch that line, but let's also talk about Goldman Sachs that's turned bullish on public sector banks like SBI and PNB after a long time, taking hope from the fact that NPA resolution will free up their balance sheets. But private sector lenders remain a favorite. Shraddha is standing by to take us through what Goldman Sachs believes and what the notes indicates. Some good news, Shraddha, finally for public sector banks?
Well, yes, that's correct. Goldman Sachs has only joined the slew of brokerages which had turned positive on PSU banks on the back of recapitalization. This one more so on the back of numbers that they have forecasted for FY20. So let's look at some of the key trends that they have highlighted they expect from PSU banks post recapitalization. First, they expect NPL or bad loan ratios for state-owned banks to halve from 9.9% in FY17 to 5% by FY20. They've also said that capital infusion could lead to accelerated cleanup as far as the books are concerned, and they expect PSU banks to arrest the market share fall, while they do believe that the shift, however, could continue to private sector banks. On the back of these expectations, what have they done with earnings? Well, they've reduced the earnings estimates for state-owned banks collectively by about 6 to 59% in FY19, but when it comes to the FY20 numbers, they have raised it by about 9 to 16%, so higher EPS growth. Another important point that they've highlighted is what they expect with respect to the ROA differential, or the gap that currently exists between private and PSU banks. If you look at the chart, they're saying that the ROA differential between private and public sector banks, which stood at 123 basis points in FY17, that they expect to come down to about 87 basis points by FY20. So that's another thing that's causing bullishness as far as state-owned banks are concerned. And on the back of that, they have revised the target price and rating for some of the state-owned banks. SBI, they have upgraded to buy from neutral, and when it comes to Punjab National Bank, they have upgraded it from sell to neutral. There's also minor price hikes coming in, and for Bank of Baroda, they've retained the neutral rating, but again increased the target price as far as these banks are concerned. But having said that, they say that their preference for private banks continues because they expect them to remain more profitable given the strong focus on earnings, gain in market share, and also the traction that they expect to see in some of the more profitable segments like SME and retail loans. So when it comes to PSU banks, and if you look at the rating changes that they have done, when it comes to most of the banks, they have retained their ratings for the bank, but they have revised or increased the target price for most of these banks by up to 8%. It's only IDFC Bank and Yes Bank where they have marginally cut their target prices. So broadly, yes, turning bullish on PSU banks, but the preference continues to remain with private banks.
Brother, thank you so much for that. All right, let's try and reconnect with K. Ganesh, partner at Growth Story. Apologies, Ganesh, we seem to have got you on a bad line. I was asking about Portia and your plans for Portia. I understand there's been another round of funding that you've done recently. Can you take us through what the thinking behind that is?
Yeah, so we had recently closed our Series C funding of $26 million led by MEMG CDC Ventures and Sabre Capital. We currently, Portia is in 16 cities, and the idea was to use the funding for further investing in the technology platform, getting into new services, leveraging technologies such as telemedicine and remote patient management, and also geographically cover next 10 cities across India. So that's really the plan. It's currently we do about 120,000 home visits every month. We plan to nearly double it in the next 18 months.
The other interest of yours, Ganesh, is in Big Basket and online grocery, and that's seen quite a bit of action. You know, I've been reading reports about how Alibaba is looking to invest either through Paytm Mall or along with it. You've seen SoftBank backed one of those players called Grofers who've been in the space. Why is this opportunity so hot again?
No, I think the advantage in opportunity like grocery is because as a category, grocery has got very frequent use case. I mean, you buy grocery at least twice a week. So therefore, it's a very attractive category for any e-commerce player, horizontal or vertical e-commerce players to look at and lust after because of the frequency of use case. And of course, even in terms of size, grocery is the largest among the entire retail sector. So it's not surprising that world major brands and even in India, well-funded e-commerce players are interested in grocery as a category. But the challenge is grocery is not one more tab or one more vertical on a horizontal e-commerce site. It requires deep domain experience, backward integration into supply chain, and that makes it an extremely tough category. Okay, right? Companies like Amazon, even globally, have not entered grocery in the full format, in the full thing, despite being operational for more than 20 years, because it is not just one more category. It requires deep domain experience. But you will see a lot of action in the space. You mentioned some of the reports that have been around about Big Basket. I don't want to comment on that, but you will see a lot of action in the grocery space in India.
If you look at your own portfolio at this point, Ganesh, and some of those the sectoral bets that you've taken, without getting into company specific, which do you think is likely to turn profitable the quickest?
No, so we have some companies in the B2B space, food tech space, for example, a company called Hungerbox that provide F&B platform for top corporates. We have multinational corporates like British Telecom, Qualcomm, ABB, all of them are customers. So a B2B business like that would obviously be turned profitable much earlier in the game and will take much lesser capital as compared to a B2C play like a Big Basket or Portia Medical or Bluestone, which is an online jewelry company, where it takes a lot of capital and time to build a brand, build trust before you do that stuff. So to your question, B2B companies in our portfolio like Hungerbox, like Social Frontier or Vernu would turn profitable much earlier. B2C companies will take time. They'll have a lot more spend and capital before they turn profitable. But their valuation scalings typically would be much, much higher than what B2B companies would get to.
Ganesh, one question, and perhaps sitting in Bangalore, you don't see the way we sitting in Bombay see it. When you look at public market valuations, many people argue that public market valuations are extremely high. Is there enough capital? Is there a sense that there is still value in chasing some of these ideas?
No, absolutely. I think India, we are just scratching the surface. If you look at number of people online in India transacting in India, even though it has grown leaps and bounds in the last 3 years, courtesy the trends I mentioned, like demonetization, like low-cost internet through Reliance, Jio, and all of those things, those have just started less than a year back. So all of them have to play out. So I think the headroom for growth, headroom for value creation, headroom for building technologically leveraged companies for the mass markets is humongous in India. So I think the next 10 to 20 years, you will see multiple times whatever they have seen. We do glamorize the startups a lot, but it's just a tip of the iceberg. A lot more is to come.
I have just one final question, Ganesh. And we're talking on a day when Bitcoin is grabbing the headlines. Does it interest you?
Yeah, I have been fascinated by Bitcoin no end. I have been trying to understand it. I have very small investment in Bitcoin, but I think it's a great story. It's one of those like the internet, what Bitcoin will do to Bitcoin and blockchain as a technology will do. I think it's amazing. Okay, right? If you're asking me, have I invested in it? Very little. I don't understand it yet.
Ganesh, thank you so much indeed, and apologies once again that we couldn't get you on a line, or on a video line that is. Ganesh from Growth Story talking about the startup environment, the ecosystem, and what he's interested in. He's invested partially in Bitcoin, not making a big bet at the moment at least. Out of time on the show. Thank you so much for joining us. Countdown is up next.
Are we live?